A day later, there is a ceasefire between the Israeli-Iran/U.S. conflict, and that has the U.S. dollar lower versus the major currency pairs. In this video, I'll take a look at the three major currency pairs: the euro versus U.S. dollar, dollar versus yen, and sterling versus U.S. dollar from a technical perspective. So let's get started. In addition to the dollar moving lower, off of the ceasefire news, the U.S. stocks in pre-market trading are trading higher, and the U.S. yields are also a little bit higher after yesterday's sharp decline after the ceasefire became a little bit more evident by market traders. Taking a look at the euro versus U.S. dollar, I'll focus here on the hourly chart to start off with, and you can see that the price action today in this currency pair has been more up or down. The initial high that we saw here came up short of the high price that we saw in trading last week. That level came in at 1.16297, and the high price fell just short of that, rotated back to the downside, but found support buyers near this swing high price again from last week's trading, which forced the price out back to the downside to the lows from last week before rotating back to the upside in trading yesterday, and then breaking through that level and coming back down to retest it. So that was a good support hold right there, and we're seeing a rotation back to the upside. A move back above the high from the month of June at 1.16297 will increase the bullish bias for this pair. Looking at the daily chart, what would that look like? Well, we'd start to look toward this swing area up here between 1.16, looks like 83 or 63 versus 1.16916. Maybe it's 83. Anyway, up there, where we could expect the next key target for the euro versus U.S. dollar level corresponds with swing lows and swing highs going back to this period right here, all the way back to 2021, where we tried to base right here, moved higher, tried to base right here, moved higher, then broke through the level here, came back up to it right through here before moving to the downside. So this area right through here is going to be key resistance on the top side if we're able to get above the high price for 2025. Again, that level comes in at 1.16297. Let's take a look at the hourly chart. Now let's take a look at the dollar versus yen next, and focus here on the 4-hour chart. We saw a sharp move to the upside trading yesterday out the weekend news of the war, and then we had the ceasefire and all the other stuff that came out yesterday. And by the way, including Fed's Bowman, who spoke and gave more of a dovish stance to counter Fed chairs Powell's and the FOMC's rate decision last week. Bowman sided with Christopher Waller, also of the FOMC board, who last week said that he could see a July cut, and that was reiterated by Bowman yesterday. So that also helped to send the U.S. dollar yen to the downside yesterday, and we're seeing an increased momentum in trading here today. We are moving toward a support level defined by moving averages. Off of this chart, the 100 and 200 bar moving averages on the 4-hour chart come between 144.47 and 144.696. If I were to look differently at the hourly chart for this pair and look at the moving averages here, we've already fallen below the 100-hour moving average. That level comes in 145.70, and that's going to be a resistance level for traders and trading here today. So keep that level in mind, 145.70. On the downside, the 200-hour moving average is being broken and tested, I guess I should say, at 145 even. Nice little round number. So 145.70 resistance, 145 even. If you break below the 145 even, expect to see further downside momentum back here. The price did find support buyers near those moving averages before moving to the upside and spiking higher off of the weekend news. So be a move below that 200-hour moving average would be more bearish. Finally, let's take a look at the pound versus U.S. dollar. Look at the hourly chart, and this pair really hasn't given up any sort of momentum in any way since bottoming yesterday near this swing area through here below the 50% midpoint of the move up from this low right here, the May low, to the high price that we saw in the month of June. That 50% came in at 1.33869, And in trading just last week, the price came down toward that 50% retracement, found support buyers moved back to the upside, and trading here yesterday, the price fell below that level and then rotated back to the upside. When we got back above that level, we started to see buying all day. Yesterday afternoon in the New York session, and also into trading here today. Now, like the euro versus US dollar, we're looking up toward the high prices for the year and finding at least a little resistance against those levels. The 136.158 corresponded with this high, and then we have the high price coming at 136.338, a little bit in between level right here, and this level today, the high price today, has come in between those two extremes as well. So if we were able to get above those levels, get above the 136.338, going to the weekly chart of this pair, you could see how that would take the price to the highest level, going back to back here, which is in January of 2022. Our high price that we saw in trading did move up toward the high price from here, which was a number of different highs from February 2022 at the 136.445. So getting above that level would then target this high price. Also target the 50% midpoint of the move down from the high price, going all the way back to 2014. If I could get this arrow thing, I'd be better. From the 2014 high to the low price that we saw in 2022, 50% midpoint comes in at 1.37683. We haven't tested that since moving to our low price in 2022, so getting above the midpoint would be not only get a significant break above this high going back to 2021, but also the getting above the 50% is always a good thing. So there you have it, a look at the three major currency pairs to kickstart your trading day this June 24th. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.